Hey, good evening, guys. Ken of Tortoise Capital, nightly strategy podcast for Saturday night, February 11th, 2023. Let's start with the RL30 slope stats from Chi Wing Chong. There we go. All right, so we've got the market SPY peaking just above a z-score of 1. And this is consistent with what we said yesterday was the market coming into a critical state after the sell-off. We've had two legs up in the market, got well above 400. It's had 4 or 5 days of sideways and slowly selling pressure, and it's coming to a critical state where we could still see a move up to Z2 or a collapse. Tech, which is a leader, is also rolling over. Finance, which had been the previous leader, the first leader out of the low ground here. Finance is starting to decay, as is materials and energy. So we've got a broad-based slowdown, and that should make this week ahead very interesting from a short-term trading perspective. I think we've got a strong case on both sides of the trade for large moves. So we'll be prepared for prime time trading next week. Now in the battle between XLY, which is consumer discretionary, and XLP, which is consumer staples, discretionary has been tracking the market and pulling it higher. Staples have been almost flat, which is really unusual behavior to see that much underperformance from things like Walmart and Coke and Pepsi and McDonald's and that. So that's kind of problematic. Now, what would be interesting is a scenario in which you get continued weakness in SPY, which might cause people to rotate from discretionary into staples as a defensive play. So you could actually see XLP start to gain while XLY and the broader market continue to decay. So that's not impossible, the flight to quality argument. So we'll be mindful of all that. I also think that means that XLP may have some components that are in interesting value positions, having not participated in this run up. So that's an area to look at. Here's a trade frame from Charles on XOM. ExxonMobil we saw was at all-time high here. Just an amazing run. Looking like a growth company. And the channel is fairly wide. When you take a look at the width of that channel, that's there's a lot of trading going on inside there, but it has sort of been a relentless move higher. He's got the weekly, daily, and the 65-minute. You can see that close Friday was just nothing but extraordinary. And the fact that it's above this peak right here at 118, there's no weakness anywhere in that thing. And oil has sold off and is starting to make a turn. That will only help ExxonMobil. So ExxonMobil to me seems like it's postured really well. He's looking for a continuation trade here with maybe $1 of risk, and I think that's a safe bet on the upside. If this thing goes, it should go right away, and that $1 is enough to give you a legitimate position size. The question is if you want to be short that, like if it breaks back below, say, 118, and you think it's going to come back to the midpoint of this 10-day channel at 114. I think there's better things to be short than the largest company in the world that has been on an absolute tear. I think there's other things that are a little less problematic. But that trade is possible, not impossible. I just think there's better targets. Like to me, the things that are already failing on weakness. I think we looked at some of those in the swing portfolio yesterday. I'm going to take a look at Dan's 30-minute swing trading portfolio challenge. Swing trading challenge. It looks to me after the first few days that you got a good strategy going here for this experiment. He's looking at a number of different entries and exits, and but keeping track on real-time decisions. He's incorporating on the 30-minute the channels from support and resistance on the daily chart. I want you to notice that those act as pretty strong boundaries, and that turning points inside those kinds of channels can lead to really interesting short-term intraday trades. Here's one right here. So this is marijuana. And I want you to notice that support on the daily chart, it was an uninterrupted move from channel to channel, edge to edge. And I also just want you to be noticing the power of the PSAR and that dragon to sort of define the underlying tidal forces that are moving these prices, that you get a lot of volatility inside the tails, but that the underlying signal is pretty steady when you study the dragon and the dots. And that's the reason I went away from candles with the extra colors to just simple thin line bars, just so that I would not pay as much attention to the bright flashing colors. And I was able to concentrate more on the PSAR and the dragon in that way. So in terms of reducing the cognitive load on the old visual system. So anyway, I just want you to notice here's a Z3 pinch breakout. Notice how when the volatility leaves and starts to compress at the turning point, there's not much volatility on the individual bars. It's not until the reversal happens that you start seeing large movements again. So there's something about coming into the station that the signals tend to get quieter and quieter until it kind of collapses to that doji, and then it either continues or reverses. So just be on the lookout for that kind of behavior. Z3 pinch with a slow decay. There was room for the collapsing dragon here, but he takes a kata 2 there because you have a high. You have lower highs. And that, to me, the collapsing dragon jumps out at me, especially when it goes from spring. It goes from spring back into winter. You have a winter, spring, and then that's a failed spring, and then it goes back into winter. That's like an auto short. And even from this level, if you've got that risk box here, you've still got 1, 2, 3 to the bottom of the support. So that's a perfect trade. And that slide is nice. And then second position here. And then when that starts to reverse, I like the exit right in here at the edge of the dragon, because I feel like we get all the excess gains on the price side of the dragon. That acts as that noise buffer. So an aggressive exit would have been here. He does get that one. And just notice again, when you get a PSAR flip at a critical state like support, which had 10 bars to fail and it didn't, that there was also an opportunity in there. Yeah, so if he had taken the PSAR flip, but not the R. Notice how the RL10 never even gets through the dragon, and that's why I say the wicks are noise. That would have been, if you had responded to the price, had been a minus 6.8, but then the positive. This looks like 2.7 R on this, if I'm reading that correctly. So, so marijuana does trade nicely intraday. Let's see. All right, so here's Tesla. I'm going to notice, and I'm just observing for standard patterns. Here's a Z3 pinch breakout. Some rising lows. Here's the Z3 pinch, which he's got mapped out. He takes this one, and I'm looking for, I think. Now, are you exiting in here? I can't really see. If so, that would be a scratch, and then I guess a re-entry here. Just remember on the Z3 pinch, you can use the from Z3 to Z3 as the risk box. In this Tesla case, that is 198 to 188. So that's like a $10 risk. I think if you take that breakout there, I'd be at the bottom of the dragon rather than. I'd rather take half the risk box because I don't want to. I don't. If this had failed right away, I'd be getting out here instead of here. And if you take half the risk box, and then pick up the PSAR, you get a pretty nice trade. And then the PSAR flip after 2 legs up is a reasonable trade. Cliff Natural Resources. This is a fairly active trader during the days. I'm reading that as your daily support. When that rolls over, a PSAR flip here gives you a pretty nice trade. This one is a little late getting in on the SSC. It's I like that quick exit. I like the short there because you got a pinch. The previous move was down. It hardly even budged. That's one that I'd normally take. I'd probably have taken the second entry here on the break of the Z3 and then probably gotten out of the whole thing in this region. Emerging markets. This has been featuring, a sell-off from this level to this feels like the new price level. I like this effort here to get long because you've had some COTA 2 action, and we're thinking, yeah, there's a reasonable chance that it gets back to this price level, and if it gets through here, back to the previous price level. And EEM have been very strong. I love the quick exit. This is supposed to work right away, and if it doesn't, I don't mind taking that exit. This big gap. Now, if you don't take that exit, you get to enjoy that. But more importantly, you didn't chase. You let it develop. When this comes back through the dragon, at least, there's a nice short inside there. Brazil trades beautifully during the days. Oh, Z3 pinch. Now, one thing I look at on EWZ is when I see a Z3 pinch, I'm not immune to taking the Z2 breakout. So, getting that even sooner. I probably would have taken that one and then tried to, on that failure, either out there or out there. I do like the PSAR flip short on a rejection of an upward move. That's a good intraday target. What he's doing here is here's the trading day, and this thing gaps down, monkeys around nowhere, and then starts to fail. So that's a quick hit. When you see yourself in that position, Dan, if you've got, depending on how much time you're putting onto it, you may be able to do that on the 3 minute as well, and maybe get a even a larger relative move. But that's a good targeted shot. This one actually has me feeling opportunistic going into next week. The fact that it's held here twice, and there was some buying pressure in here, even though it didn't follow through. The fact that it didn't fail further and closed well, I'm taking as a positive sign going into Monday. U.S. steel. This is one that I prefer actually on the 3 minutes. I mean, I do trade it on the 30, but I do like it on the 3 minutes because of these. This is not unusual behavior right here. I love that after the harsh winter, this gets up to about a 50% retracement, cannot break out at all, and then starts to collapse, and there's your gap down and go. And this is also one of those a reasonable alert for Monday that it's on the right side of the angels, and there's two very clear price targets to reach. And then finally, he gets a compound trade here in Alcoa, which also trades intraday really with great liquidity. There was an opportunity early in this one at the start of the day because this thing has been down, down, and starting down again. So you've got the Kata 2 and note the slope of the river, and the dragon was it was even in the summer and had rolled over here. So now when you get to this location, there's a gap up and sells off through the dragon. That's attractive to just put that box and get short right in here. This is still good right here. And then he holds that one overnight. And on the next morning, it starts gapping down. He goes for the second position. It doesn't work, so he gets out quick. That one pays off a couple CD, 2.2. So this is looking like, what I like is this is still not enough data to get the full Monty on here, but for 3 days he's got 2.77 R in his discretionary exits, almost an R a day. If he uses the PSAR flipping exits, 9 R. So that's going to be an interesting analysis trend for you to follow through with, to codify that in rules. And again, on this is one of those where the principle of the Wu-Wei exit, where you take half and half, in order to not sweat over the decision of which one to take, put half on this and half on that, and then you're automatically getting that blended return. But more importantly, it reduces your cognitive load. And the other part of that too is it's typical, like if you've got something going up and then it starts to roll over and your discretionary exit gets you out, but say the managerial exit is not out yet, and you end up taking that first discretionary exit, then when that doesn't fail, the resumption allows you to put that other half a position back on because you have some evidence that this thing held the conservative support level. So playing with half that position with your discretion allows you to satisfy that urge, but at a lower level of risk as you begin to develop your proficiency, your trading quality number. Okay. All right. So that's everything I got. We'll get this published and posted and get after it tomorrow morning for the um, creativity guys. Just a reminder, we got the new creativity course starting 15th of February. I think it's next weekend. We're going to get working on it. And off we go. I think if you're interested in swing trading, that you should be taking a look at those opening minutes of the nightly podcasts. I've been managing a swing trading portfolio as a project for about the last 3 weeks. Some very instructive ideas in there. So take good care, and we shall see you tomorrow. Let's go, Chiefs.
Hey, Chiefs.